Good afternoon, welcome Bill. So the whole of October has been fantastically volatile. Everything's been going down.
Yes.
Equities,
The weather.
oil, the weather's been getting worse. Have we hit the bottom as far as equities are concerned? Was there any reason for the correction in the first place, and was it overcooked?
Well, I think the two things, and let's just look at it from a UK standpoint. Yes, the correction, okay? Again, we've been talking about this. We had a much better first quarter than expected. Much better first half. Great third quarter. And then is it a situation, did we go into the fourth quarter, as you just mentioned, once volatility started, was it just a situation, maybe let's take my profits. But I think the two things that really, didn't take people by surprise, but all of a sudden they started to take profits, like technology, okay? Yes, I know Apple's doing extremely well, but is it a one product company right now? And I don't have to tell you anybody else, and hopefully nobody's listening, okay? We've had a slight problem with the supermarkets here, okay? Tesco's, Sainsbury's, Asda, Waitrose, etc., etc. And there was a fantastic article, which I agree with, okay? Written by, I think, the chairman of Waitrose yesterday, saying it happens about every 40-ish years. We go through a, quote, shopping evolution/revolution. 40-odd years ago was, let's all go to the supermarket and we'll all do weekly shops. Well, now it's almost a return to corner shops. And I think one of the YouGov or something like that interviewed like 2,500 people your age, right? And by 4 o'clock every afternoon, they didn't even know what they were going to have for dinner that night. So I think what we're starting to see there in reference to those is people shopping at the last minute, buying things that they only need, okay, rather than the big basket. So that has hurt the market. Also, again, as we know, it's been a rather rocky road for the brokers, the banks, etc., etc. This morning, okay, 8,000 people announced layoffs at Lloyd's. And I think one of the things, and we probably saw this morning, where we got a 4-year low in consumer sentiment, okay, consumer confidence. Yes, I know we've got the lowest unemployment rate in, I don't know, 304,000 years or something. But I have to look back at the strikes we had with the NHS, the midwives. I mean, what is 13.5 million in NHS, but they're like 3 million plus. I mean, I think they were getting like a 1% pay rise. So that the underbelly, yes, they're employed, but I mean, if you look at it, they're probably at least a minimum of 4,000 pounds worse off, okay? And then you had the other strike with the TUC and stuff like that. So yes, we have, maybe full employment, but there's not a lot of excess money floating around.
And it was also started by the sectors. I mean, as you say, the supermarkets, they get hit, then Ebola turns up, all the airlines, all the travel companies get hit, people start to panic, and we had that sell-off.
Yes.
We've now retraced, a couple of 100 points in the FTSE. We're done now with the selling, do you think? Is it now rebuild stage?
I think we're done with the panic selling. We may have continued selling, but I will have to admit, I mean, I had 1 or 2 people look at it, showing me a couple of investment vehicles, okay? And as I told them, this was earlier this week, I said, I guess maybe I'm like everybody else. It may be the best thing since sliced bread, but I think I'm going to, quote, keep my powder dry. We're almost in November, then we got November, we got December, then Christmas, and so, my feeling would be, I would rather lose the first 2 or 3% of a real rally than jump in early and all of a sudden then be, 4% off. So no, I would expect the volatility to continue, not only in the equity markets, the foreign exchange market, the bond markets. I mean, I don't know whether you saw this. The Bank of Japan auctioned, I don't know how many, 60 trillion yen of a 90-day bill, treasury bill, right, at a negative yield, the first time ever. And it was a question of the Japanese saying, the Bank of Japan paying you to buy their securities. But again, the Japanese saying, I don't care what the return is, I just want my money returned.
Yeah, that's interesting. The BOE minutes came out yesterday, more dovish than we expected. Expectations for interest rates have already been pushed back. Are we going to go back further? When you now sort of predict?
Okay. I mean, we had this conversation, and at one point, earlier this summer, you know, when sterling was heading towards 170, I said, you know, 50-50 chance in November.
Yeah.
Well, I may have confused you because you may have thought it was November 2014. I mean, right now, after the data we've seen, I'm expecting the first rate cut probably the end of the third quarter, and I'm talking the end of the third quarter, maybe August, September. I mean, I moved it sort of back to 50-50 June. Now I think it may be getting even less so. And the point being is, and I'm sure I've said this before, you know, it's not written in stone or in the Magna Carta that it has to be 25 basis points. You know, if they're concerned about starting to raise rates, they've already told us it's going to be lower for longer. There's not a soul out there, at least, you know, when they finally dropped those rates by March of 2009, nobody ever expected, nobody's ever even thought about, will we get back to 7, 8, 9% base rate? I mean, most people say we may never see 5%. So my feeling is, if they're that concerned, slowly, rather than lower for longer.
See what the reaction is.
Yes, exactly right, okay? And I mean, you're already starting to see mortgage approvals, okay? Seeing how I was in town last night with my wife, and we were staying with friends, you know, in Parsons Green and Fulham, okay? And we were just walking over, and there was a Dexter's and a Foxton. And I noticed, you know, because it's an area we moved from 5 years ago, and I noticed, excuse me, there were a number of houses to let and for sale. And these were, you know, we're talking in the 7 figures. And so I sat down with them, and they basically said, well, I don't think we have to tell you. It's not panic selling, but everybody's talking about this mansion house tax. Yeah. I'd rather lose a few quid by selling it now and make that quid not having to pay the government anyway. So, but I was quite surprised. So the housing markets was cooling off from plus 21%. So you know, it's a nice level to cool off from. So you know, I saw that again on the ground last night.
Well, and I think Fox's results came up last night. So that's down 30p from £2 to 10 or something.
Well, yeah, I mean, it's a question of, you know, it was so easy. I mean, it was a question of, it was probably like, you know, buying in Spain in 2006 or 7. You didn't sell anything, you just were filling out an order book. Yeah. And that's what these people were, okay? I mean, the simple fact is, you know, for each buyer, you know, or each seller, there was, you know, who knows how many foreign buyers, and I don't think that stopped. Whether it be Spanish or Italian. I think even, you know, the mortgage people are saying, well, you know, the big buyers in the last 2 or 3 years have been cash carrying Italians.
Yeah. Okay, the oil has taken an absolute pounding. Why is it? It's obviously a supply versus demand issue. Is it the case that there's just a huge amount of supply?
Yeah, there is, okay.
And in previous times they put a cap on that supply, so you can maintain the price.
Exactly right, okay.
Why are they not doing that this time?
Well, I think what you're seeing is possibly, you know, Saudi Arabia not playing ball with them, okay? Had this happened, maybe June, okay? The key was 73.4, 78, 79, okay, when all of a sudden, you know, Saudi controlled it. Now it's a question of, is it a situation where, and I'm going to be political, is it a question of, even whatever this level is, Saudi is probably making enough money, but I mean, what do they say? I think Libya needs 105, Iran needs 98 or something like that, so they're not anywhere close to their break even. And I think it's really a situation where we have overproduced, and I think one of the things that the market, you know, we had a blip up, you know, the other day, but it's still not going to, I mean, we're talking now, I mean, some of the major dealers are talking 80 to 75. I mean, I don't see anybody talking 120, 115, you know, and that's what we're looking at. So, you know, that will continue to go. We have overproduction. I mean, you look at Cushing, Oklahoma, I think it's like a 28-year high. The only interesting thing about this, at this price, all of a sudden fracking, you know, it's not in the news. And I'm sure the anti-fracking people in the UK are just pleased as punch, you know, that you know, crude oil prices are at this level. So, you know, there's no pressure on them.
Presumably the oil price is going to zero one day.
Yes.
How far are we talking?
Well, I mean, I don't know.
100 years, 200 years?
I mean, there will always be supply and demand. And I think one of the things is that OPEC, not that they can really control it, but I mean, look how quickly, 3 years plus, Libya coming back on, Iran coming back on. And you look at those two countries, that's probably their only, you know, they can't export sand or gravel or something. So, I mean, it's really their only product. And of course, in both of those countries, tourism is not an income earner. So I mean, they're quite desperate.
Make their money, then go set up elsewhere.
Exactly right. Okay.
Their lifestyle.
Yeah.
Okay. Last question. If you were, I don't want to run over. If you were Mario Draghi, what would you do with the issues they've got there?
This is going to be quite interesting. Okay. Is the remaining strength of the euro, 126, 127, 128, is that going to force, let's say, the other countries, unless we know that other country is, Germany, okay? The question is, does the currency dictate the politics, or could the politics, when they say, we really can't afford this, and maybe Germany's going to be up, now, hey, we saw manufacturing today, right? Germany, very strong. So the currency at this level is not affecting their manufacturing and or their exports. But this is going to be the dichotomy. How good a politician is Magic Mario or Super Mario to be able to balance the books? And you even had Courret, whoever the French guy is, saying in L'Echo yesterday, saying, we can't afford to have the euro at this kind of level. And I don't know anybody, whether it's reading in the FT, see it on Bloomberg, see it CNBC, etc., there's not anybody out there that's not talking a 6 to 12 month scenario for dollar euro at 118 to 122. There's not a soul out there that's even talking 125, 126, 127. And it's what the Germans have to look at is, and I was asked this question earlier today, what about recession? Oh, we're well past recession. We're in deflation, disinflation, okay? In some of the 6 or 7 smaller countries, even like Spain or Italy, okay? This is a real problem. So it's going to be a question of, as I said, is the strength of the euro, is that going to dictate what the political situation, or the political landmark is in Germany? Because it has to change.
Is that partly coming, how much of that is coming due to demand for German government bonds? Is that making
it's quite interesting you just said that, okay? Germany just auctioned a 30-year Bund yesterday. It wasn't covered. Okay, there were excess bonds around. So that's the question. Is it a question of, have the yields gotten too low? Forget Japan. Have they just gotten too low where you're not seeing the movement here? But yet you're still seeing the movement into 10-year or 30-year treasuries, okay? So you see a stronger dollar, a declining yield here. And of course, we here in the UK are caught betwixt, because you got the gilt much higher than the Bund, of course, and then of course the treasury, and yet you have sterling struggling at the 160 level. I think it traded below 160 this morning when we got consumer sentiment. So, but it's a question of, the politics, more so than Draghi, okay? We're going to have some kind of legitimate philosophy coming out of the Germans that, wait a minute, the euro at this level for the team, forget me, for the team, okay? This has got to be a team effort. Well, of course, Germany says it is a team effort, as long as it's my team, in my ball, and we're playing in my stadium, and you can't do that, okay? So it's going to be quite interesting to see what happens between now and what the next meeting is, 2 weeks from now. But, we had the covered bonds, and we've had this and the corporate bonds, etc., etc. Very difficult, because they really, if you look at the treaty, and of course I read it every night when I can't go to sleep, they can't do it, you see. They can't come in and, there is no ECB 7 1/4 of 2020, okay? It's gilts, it's, Spanish bonds or Italian bonds. So that's what it's going to be. So I didn't mean to evade the question, but it's got to be a question of how strong a euro will finally start changing the political landscape in Germany. And that's how we're getting it right now.
Perfect. Thank you very much.
Thank you.
Excellent.